Today, I'm excited to have Kevin Moss. He has spent nearly 4 decades making sure banks don't lose their shirts, their wallets, and their sense of humor. Welcome to Bits and Banks, the digital disruptors, the show where we get candid with C-suites around digital transformation and how that's changing the lives of members or customers, one bold idea at a time. Our mission is to really, in a candid way, spotlight real stories around digital banking innovations, the wins, the fails, the pivots from the front line in an unfiltered manner. Today, I'm excited to have Kevin Moss. He has spent nearly 4 decades making sure banks don't lose their shirts, their wallets, and their sense of humor. Kevin's been the chief risk officer at both SoFi and Wells Fargo, to name a few, where he's navigated the financial crisis with success. These days he's an advisor on multiple fintechs and helping these wave of digital transformators, disruptors, avoid rookie mistakes. And yes, Kevin, let's just not have him calculate the credit score live for you because he has that gravitas. Kevin, welcome on board today.
Thanks. Great to be here. These days I look at what I do, appreciate the introduction, as a way of giving back. Had a great career. My philosophy on risk management is that most people make the same mistakes over and over. It's recognizing when you see it and how to explain it to people.
Yeah.
One thing that I just wanted to share with the audience as part of that is there's a great nonprofit called Scholars of Finance, which has relationships with over 60 universities around the country.
Yeah.
I've been working with them for a while now, talking to students about the social responsibility of being in finance. So to me, at this stage in my career, it's about helping the next generation of risk leaders and business leaders. And so that's kind of what my goal is to share and pass along all the lessons and experiences that I've had in my 40 years in financial services.
And you've done that beautifully. I mean, I see you as a mentor, and I've seen, you've shared your experiences with me and kind of informed my best practices / my learnings in risk management for digital. So I appreciate that too.
Thank you.
All right. First question for you, Kevin. If there's one fact about you that people didn't know outside of your impressive risk management profile, what would that be?
I've got a very large family. We have 6 kids, 6 grandchildren. So a big part of me that people don't see on LinkedIn, obviously, is how much time we spend with our family and how important family is to me. So we've got a basketball team and a sub for kids, and we have one up and coming, obviously. So family is really important to me. We have, great kids. We've got a large family behind that, and I'm pretty lucky to have that opportunity to share, outside of the work that we both do.
Appreciate that. First question then, on the professional side, could you talk about a couple of initiatives where there was digital innovation that deeply involved members and customers, and something that created a wow moment or an insight for you? Could you share something from your experience there?
Yeah, I'd have to say, I've been working in the startup world for like over 10 years now. My view is that most banks use the digital channel for servicing and not for origination. And so it's a way of a bank pulling together all of your accounts But inside the financial institution, there's a bunch of lines of business that operate very independently. The one thing that I think really helped me transition into being more of a innovative thinker about digital was my roughly 3 years at SoFi. I think Mike Cagney and then Anthony, who took over. Mike's a brilliant leader, and I think one of the biggest things that I took away from that experience was the intense focus that you need to have on managing the funnel. In a banking institution, which is typically much larger, when I joined SoFi, I think we were just under 600 people or so. Because fintechs are smaller, because they're focused typically on one channel, they have the ability to operate, I think, more effectively than banks do. In a bank, for example, and I'll talk more about what I mean by managing the funnel and working more collaboratively. In a bank, the compliance team reports up through one side of the organization, typically. The operations could be another side. The risk team, yet another side. And so it's often difficult because each organization's policies and practices have impacts on the other one. Marketing, like what channels they choose to originate. And so in a fintech, what I think Mike Cagney and ultimately Anthony took and did brilliantly was the ability to get the organization together and create a joint accountability. So if we started every week, we would have a discussion about what was happening in the funnel. If there were any changes, it could be adding one piece of information to the application. It could be the order in the way something occurred. Like we had the management process in place with, marketing, risk, compliance, operations, to understand any deviations that happened inside the funnel, how it impact conversion. It was a master of the process, and in my view, it's the best practice that I've seen across. I've worked with probably over 150 startups now in my 10 years in this space, and I think Mike Cagney, his process was the best that I've seen. And so I think while it's not a digital innovation, it's a management process around decomposing the funnel into each one of its fundamental steps and understanding the management information and the accountabilities for each owner of that process to be part of a larger, more collaborative organization that allows you to understand the ultimate goal is conversion. The ultimate goal is experience. And risk and everything else are just part of that soup that you're trying to create. But so I would say creating that process, I've helped organizations in looking at their funnel and looking at what they're doing. A lot of what I do is help organizations find the right balance in like risk and return when it comes to things like fraud and other friction that might be created in the process.
Those are the words that are popping up in my head. Risk, reward, risk, reward, risk, reward, right? Every time you open up the funnel, there's opportunity for reward. There's also opportunity of fraud or defrauders, so you've got higher potential risk. And that trade-off between risk and reward, whether that's internal rate of return or ROI, however you measure it, it requires these different cogs in the gear chain to really work together very well, right? And I think in the current environment, again, you're a master at this, but in the current environment, where the rate of change of applicant profiles is so, whether that's businesses or consumers, is so rapid, those cogs have to work even better in orchestration, because what you thought last week could have moved by 20% the following week, right? And you have to kind of stay on it. Your point is, if that orchestration is done in a way that is systematic across the risk and reward functions of a lending organization, then you truly create best in class, which is what is required right now. You can't fire and forget kind of mindset, right? In that sense.
Yeah, and I think particularly with digital fraud,
yeah,
where everything looks great and all of a sudden an organization is being attacked by a bot or a fraud ring. Like, you have to have real-time information to understand what is happening. And then you need to be able to have a decisioning platform and orchestration capability that allows you to push that fraud somewhere else. Fraud doesn't go away. It just gets pushed somewhere else.
Yeah.
And so it's really important. That's why this management process, which each owner of the step in the funnel has an accountability for, is how best-in-class digital experience and best-in-class conversion happen.
Beautiful. Let's move on to the next question. Let's flip it around. So you talked about how do you build successful, scalable digital innovation in the lending and deposit space. Flipping it around, from your experiences, this could be at fintechs or larger institutions, did you have one or more digital initiatives that didn't go as planned, or what your starting hypothesis was versus where you ended up? And did you have a failure? I would love for you to share something in that regard, or did you have to pivot to prevent a failure? And what were some learnings?
So I'd say it a couple of different ways, but it's the same overall message. Oftentimes, when people try to take processes that are maybe not digital and make them digital, what they fail to recognize is how the process needs to change. And so, like in decisioning, which I do a lot of work with. I mean, I'm an advisor with companies like Ocelar. I've worked with all the decision engines out there. Obviously, I'm a friend of Corridor. What I've seen more than once, I would say multiple times, is that particularly when people are trying to take things that occur in the physical world, operational processes, underwriting processes, and then make them digital, they failed to recognize the opportunity to take advantage of things like automated decisioning, like too many referrals get into underwriting.
Yeah.
The rules are under-optimized. The fraud stack is not a leading fraud stack. You don't have the right tools in place to cover you against all the different types of fraud risks that you have. So I've seen this a lot. And frankly, this is part of what I do as a consultant, is work with organizations to figure out, where those gaps might be and what tools make sense to use. So I'd say that's probably one situation I've seen. I think the other one I've seen is that not everybody in the organization always understands, like, bringing in new digital tools because they may not have experienced them before. So I've seen a situation or two where people go out and license a decision engine, but the engineering and product teams who may have built their own rules and basically built all their own engineering and coding before. And now you're bringing in a licensed decisioning platform that is supposed to subsume processes that, as they got more complex, got more and more difficult to manage. So the speed to market, the ability to aggregate data coming in and run and test and then
being nimble and flexible and all
very
that.
nimble, and frankly take the bat out of the hand of the engineering and product team, put it into the hands of the risk and operations teams. I've seen that go very poorly in some situations because the engineering and product people did not have the understanding of, and also the willingness to let go of those processes. So it's really important when you're doing digital innovation that you prepare all the stakeholders for what you're really trying to accomplish. Otherwise, you'll have people at various stages of acceptance and support of digital innovation because it has personal impacts on them and their teams.
Solid. And I think that kind of massive digital transformation also requires very strong gravitas of leadership, where the leaders can say, hey, this is what I'm expecting downstream 3 years, 5 years from now. So bear with me. The ride will be bumpy, but we'll have a smooth landing downstream. And to your point, maybe we get away from some of the duct tape solutions that we've done in the past, because that will not serve us with the environment.
Yeah, and I think it boils down to an organization's ability to also build the business case. And often what I find is digital is the business case is around FTE reduction. Hey, I can improve my efficiency. And that is true. But the bigger part of the business case, when I look at fraud, bringing in world-class fraud solutions like a Secure or a Centrelink, what I find is the biggest impact is actually the incremental revenue, because you can reduce the review, the percentage of accounts that get into any kind of fraud or KYC review, because you have better models, better strategies, integrated with the right kind of orchestration capability, and your conversion is higher. Yep. So the biggest part of the P&L, sure, you can get lower fraud losses, you can get improvements in your operation. That's important. But conversion and booking more accounts, because you have less friction and less hands touching those, that's where the real opportunity is in a lot of this digital innovation, in my view.
Awesome. A very seasoned view there. Last question for you, Kevin. If you were to look out, and I preface this question with financial institutions in the mid-market. If you were to look out for the next 3 to 5 years, what is one disruptive innovation, or what is one area that they should focus on to really prepare themselves in the next 3 to 5 years?
So I'm going to talk about two. Okay. Because I think both are really important. So one is, I'm going to combine both the ability to use AI and ML in credit and fraud, along with alternative data like what open banking brings. Mm-hmm. I think most financial institutions are still behind in that area. And I think as this evolves, I know the CFPB is reopening 1033, but hopefully we're already well on our way, I think, with deposit aggregation and other practices that are already in place. Yeah. But I feel like once we get tokenization where we don't have to provide banking credentials, we're going to be ubiquitous between credit bureau data and deposit transaction data. And companies like Prism Data and Nova and others who are offering both attribute sets or features and models, I think, we got Vantage 5.0. This thing is really in the first or second inning of opportunity. So I think over the next few years, I expect digital to enable deposit transaction, and other transaction data to become ubiquitous with credit bureau data. And the best models will be a combination of the two.
And they will capture the ability to pay and the willingness to pay. We can look at it holistically.
Absolutely.
Both, right?
Absolutely. The second thing that I'm extremely excited about is through the use of LLMs, large language models. I think whether it's in customer service, collections, operations, like AI agents are going to make all call center, back office operations, frankly, customer service interactions way more efficient, way more consistent, and sure, it's going to have some impact on, I think, jobs. It's going to make operations 80, 90% more efficient. But I think it's exciting. I think because so much can be done as those agents become more and more sophisticated and experienced, as they deal with more and more issues, they'll get better and better. So I'm excited about both of them. It may not be 3 to 5 years. It may be sooner. Yeah. But I think AI agents, agentic AI, and LLMs offer a game-changing customer experience.
And 2 points I'll just quickly make related to that. One, I think Klarna is a headline example, right? As a public company, they've been very vocal in their public filings and investor calls about how they've gotten a lot of benefit out of squeezing costs, improving standardizing capabilities and responses or interactions, and still maintaining a very strong NPS while they've taken 40-50% of that cost out, which I think is I think they're tip of the spear from that perspective. And the second one, which is a little bit about us in that sense, that our guardrail offering GenGuard X, and there'll be a few announcements in the future, but being able to look at the control side of it, the watchdog side of it, is going to be as important as this technology and solutions of LLM percolate more into customer and member management. Guardrails will have to get more and more robust because the regulators will be watching closely. So when you put solutions which, again, risk reward, they generate a lot of reward for you, you have to continuously look at it from a risk perspective and make sure that you're not tripping up, and have solutions in place which go beyond just human monitoring, right? So,
of course. And the last thing I'd say is, like, I grew up in a highly regulated world. That's the world that I believe in, and it's not what administration is in power shouldn't change the importance of doing it right.
Correct.
And so I do feel that all of this stuff, like RegTech, is another part of the disruptive opportunity that I think organizations have integrated through the front end in their decisioning platform, as well as on an ongoing basis. I think LLMs, all of this AI, ML, offer the ability to, I think, innovate in compliance in the same way that we have in other areas. So,
thank you, Kevin.
Thank you. Appreciate the opportunity.
And phenomenal conversation, and I look forward to sharing this with the community. Appreciate it. Thank you.
Thank you.
All right.
All right.
Thanks, Kevin.